So guys, this video is brought to you by Active Trades. They are a well-trusted brokerage. They've been in the game for over 20 years. They are multi-regulated as well. And they also have increased client protection of over £1 million. So very, very safe. Do check them out. Head to the description and let me know what you think of Active Trades.
Hi, my name's Atish. I've been working with Samuel Co for 7 years now. Initially started with the junior trader program, have the privilege of being taught under Sam, and started my journey as a complete novice trader. It was a new career that I was after.
I took the junior trader program last summer. Since then, trading's really taken off for me.
Now I have the privilege to take the lead on the junior trader program and have the opportunity to teach our new intakes and hopefully take them to a very novice level of trading and to build their accounts up. I also conduct trade reviews with our trading team, and that's monthly 30-minute reviews with each of our traders. Almost just to coach them and to make sure they're extracting as much as they can from the market, highlighting any errors and being able to really get the best out of them on a monthly basis. It is just before 8 o'clock, getting my morning kick. Wouldn't be able to function without a nice black coffee in the morning. And looking forward to the trading day ahead. Hopefully it's going to be a good day in the markets. I'm actually in a couple of trades already, and so hoping for my pound-dollar short to hit TP. We've got some news today. We've got retail sales coming out of the US. So close to the afternoon session, I'll have to decide whether to hold that position through that high impact news or perhaps secure some of the profit, but time will tell. We've got a handful of trade reviews kicking in as well, so that's going to kind of break up my day quite nicely. And it'll be very interesting to see how our team coped with yesterday's volatility due to inflation figures out of the US and whether they decided to trade the news or perhaps take a step back. So that's the plan for today. We'll see how it goes. One of the first jobs that I'd normally be doing in the morning is just to confirm research on big news releases in our given day. I utilise my FX book for this normally, but there's loads of different websites that will tell you similar information. So I did have a quick glance last night, and there are retail sales coming out at 1:30 today. And so the UK session should be fairly predictable, fairly straightforward. Ideally, maybe we hit TP before then, and that would be amazing, and then I can just sit out of this news release, which is generally how I like to tackle the news on a general basis. I'll be cracking on with my first trade review with one of our more established traders actually, so it'll be hopefully good news and see how he's performed.
The problem is that when you trade against the trend and you lose, it's the amount of regret that you hold as a result of poor decision making. So we want to put ourselves in a position where our losses are beautiful. Like, we love them, that we think the losses is fully justified and you're fully happy with your decision, even though you've lost money on it. The fact that if the same opportunity were to arise again, you'd take the same trade. That's kind of where you want to be in terms of accepting losses. And for me, the best way to do that is to trade with confluence and to trade with multiple factors in your favour. So here we look at the daily on cable, and we can see it's bearish because 21 above the 8, which is something that you're already familiar with. And it means that I predict that this day's price action is going to go down. That's my overall prediction.
My main attraction to FX trading is the scalability nature of this particular line of work. I come from a business background, and in previous employments I'd had alongside with the business, what I understood is that if I wanted to grow my wealth and earn more, it often involved working harder, more responsibility, and taking on more tasks, almost to work your way up the hierarchy. Trading obviously doesn't fall with those strict guidelines, in the sense that the same trade that you operate on a $1,000 account can be replicated on a $2,000 account or even a $100,000 account just by optimizing risk management. And I basically understood from a very early stage that just developing my strategy and developing my discipline within the markets would allow me to extract large amounts of money from the FX market whilst not having to do a whole lot more. After graduation, I went straight into business. I currently own a sports bar / restaurant in the local area, which is predominantly busy during key times of the year when most people are celebrating with their family and friends, be that Christmas, bank holidays, even weekends. I wanted a more work-life balance, and that's what I was craving. And this kind of prompted my interest into the FX markets, understanding that I could work on my terms when I wanted to and as hard as I wanted to. That prompted me to apply for the Junior Trader Program, and after getting accepted, my journey started with the company.
Just want to show you a handful of trades that I've taken over the last week or so, and these have predominantly been on pound dollar. And so on our daily time frame here, we have a clear sort of bearish trend demonstrated to us by our moving averages. So we have our 21 above the 8, which for me confirms bearish trend on the daily time frame. The one taken last week had a really good entry, ended up being a good winner. Gained confirmation on trend on the lower time frame. That's always important. So for me, I like the hourly to be in the same direction as the daily. And it just demonstrates the position here. So we saw price accelerate up from the previous lows in the region of 120 pips, which for cable within a day is quite a lot. And also broke through numerous resistance levels and rejected R3, which as we know is a key level that price normally stays between within any given trading day. Managed to get a really good entry, got bearish confirmation on the hourly bar, and entered at the beginning of the next candlestick. Stop loss at the time I believe was above yesterday's R3, so we had a stop loss of around 50 pips or so, with a take profit down at previous lows at 130, so about a 2-to-1 trade. And we had a really good start, price sold off real quick, which is great. And then I ended up holding it overnight, which is not something I often do. I do like to close trades at the end of the trading period, but on this occasion I think it had the legs in it, and so held it overnight, which is a little bit rocky just because it went sideways for a lot of the day. Tried not to look at it. I'm very much sort of a set and forget approach and just let the trade do its work, and it eventually did TP down here at the bottom, which gained a nice 2% position, so really pleased with that. Really textbook, nice clean setup. The following day, after closing that position, we saw price rally back up again to a nice key level, and the same theory applies. We see on our daily time frame we're still bearish, so my prediction is that this is going to be a bearish red candlestick. My objective now is to try and get in at a nice high point of the day, and on this second entry here, as you can see, I've managed to get in at the highest point that price showed me within that trading day. Perhaps a little bit premature on entry, could have waited for a bit more confirmation, but decided to take the position. And on this occasion we hit stop loss, unfortunately. However, not huge amounts of regret on the position, and I think generally that's how I like to judge the quality of my trades. It's how much regret I will take upon losing it. And on this occasion I don't have huge amounts of regret because we were overbought at the time. Daily was bearish, hourly was bearish, sold at the high point of the day that was visible at the time, and so we took a loss, and that's where we are. The following day, again still with the same outlook that the daily is bearish, hourly is bearish, and so I'm very much predicting another bearish move on cable, and we're currently in this position now. Got a really good entry, again shorting at the high point of the day. I was aware that obviously we had inflation figures coming out on this particular day, and so hence we can see the volatility kick in, so we had to offer it a nice wide stop loss, but reward to risk was still met, in the sense that this was above it wasn't a 2-to-1, which is what I like to go for. It was just marginally over a 1-to-1 with a 100 pip stop roughly and about 140 pip gain, so roughly a 1.5-to-1. Managed to see through the volatility of the inflation news and currently sitting in a decent open profit of around 110 pips and hoping for it to just meet these previous lows, which will again take me out at a rough 2%. So all in all, good trading week so far, very rule driven, trying not to overtrade and take anything that I'm not completely happy with, and that's currently where we are. So we're at 10 a.m. in the morning, and in this open position just here, bear with me, we are currently up just over 2% in this cable short, and hoping for it to hit TP, which will bring me to just under a 3% trade, which will be a great return for this time in the morning. There is also a euro-dollar short running at the same time for very similar reasons. I split my risk upon these two positions, knowing that pound dollar and euro dollar are obviously very positively correlated and tend to move in the same direction most of the time. And so there is an element of sort of doubling the risk on this, but based on my lot sizes and risk calculation, it was essentially putting 0.5% on each of these trades. And this one's also running down in profit, not as nicely as cable, so I might sort of secure some of this and look to run cable on to hit its TP.
I currently hold a BSc in maths, so I come from a strong numerical background, and I think that probably adds a whole load of value into my risk management and general understanding of probability trading. And I think that statistically that gives me a higher chance of doing well in this line of work. I also hold a certificate in business accounting, which is the part qualification of the SEMA qualification for accountancy. And that was always my backup plan, knowing that the probability of doing well in the FX markets are sometimes slim. And I thought it's always wise to have an exit route should this not be for me. And I think that's fairly important for anyone that's new, trying to make it in this line of work when so few people do very well. And so that's why I thought having a good foundation and something to fall back on would be a wise move. Lunchtime, I'm going to go for a quick gym session. I think it's nice just to break up my day, and as mentioned, I'm not keen on sort of watching my trades play out. The cable short and the euro short still running. Not going to be tempted to close, and I think it's a good time for a quick workout. Just before US news at 1:30, so gonna go for a quick run, bit of a weight training session, and then we'll see how the afternoon goes.
This video is sponsored by Active Trades. They have got really tight spreads and fast trade execution in under 4 milliseconds. Be sure to check them out in the description and let me know what you think.
Okay, just a little update. Both the trades have hit TP, which is amazing news. Really well executed trades in my opinion. We have our pound dollar trade, which came down and closed us out at previous lows at 150 odd pips, which is great. It kind of burst through that TP. I wasn't at my screen at the time. As mentioned, I generally like to let them do their thing. And so it is selling off a little bit extra, but no regrets on that. It hit previous lows and really pleased with that. So a nice 150 pip move on cable. The positive correlation with euro dollar likewise did a very similar thing, and I'll just pop that up here for you. And there we go, that literally tagged us out right at the bottom bit of rejection again, targeting previous lows, 81 pips positive. So all in all, it's been a really good week. 4 trades taken, 3 wins, 1 loss. That you can see here, we managed to capture 4%, which is amazing. Average win higher than our average loss, always making sure that reward to risk is in our favour, and minimal touching of positions, just allowing them to do their thing, with a viewpoint that if it wins, that's great, and if it loses, hopefully we can learn something and improve our entries on the next trade. So all in all, really good week so far, and we'll see what the rest of the afternoon has in tow for us.
In terms of percentage growth, my largest win would be a 6-to-1 reward to risk. I'm fairly rigid upon my risk management, and so it's nothing too exciting to maybe scream and shout about, but I generally go for about a 1.5 to 2 reward to risk on all of my trades. Occasionally there may be opportunities to scale into the move should price break key levels, and I think the highest that I have achieved is about a 6-to-1, which obviously I was over the moon about getting. I wouldn't say it happens very frequently, but I do enjoy the idea of having small, frequent, progressive moves upon my trading accounts, albeit not massive wins, but they do come regularly, and I think that's fantastic for my general psychology and mindset. My biggest loss in trading is obviously 1%. Just kidding, although nowadays it is 1% because that's the maximum that I will risk per trade. During my early stages, I kind of went through the typical journey of almost gambling in the markets, starting with a very small amount of money and trying to grow that very quickly. That's obviously extremely hard to do, and with my starting balance of $1,000 at the time, it meant that I had to risk a large amount for it to be significant in terms of the profits. So I think my largest loss at that stage was probably around 50% of the account, risking $500 on that trade. I take a very low risk approach to trading. The scalability and the understanding that the more funds I have under management, the larger my growth will be. I look for small progressive increments on my P&L. I think that probably categorizes me as low risk, but I feel that does wonders for the psychology around trading. We collectively know that the psychology and mindset around trading is probably the biggest hurdle, because in fact the actual process of generating money from the markets is not difficult. Strategies are not hard to follow, and risk management is a case of rinse and repeat. And so therefore the major banana skin on our journey is maintaining good psychology, and therefore I generally take a low risk approach and put a lot of emphasis on minimizing regret upon my decision making. I understand that if I take upon any trading decision, if I have minimal regret upon the decision, then whatever the outcome, I'm not holding any sort of negative emotions onto the next trade. And so essentially, before I press buy or sell on any position, I need to make sure that I'm completely happy with any particular outcome, and therefore my trading volumes and activity is fairly low, but I am genuinely very happy with every trade I take, and therefore when the losses come, it's all part of the plan, and it will all lie within my probabilities, and therefore I can take it on the chin without having any adverse negative reactions. It doesn't necessarily have to be huge wins in order to whet my appetite. I do take a low risk approach. I do risk a maximum of 1% per trade, and I do go for reasonable and achievable reward to risk entries. It means that yes, my win ratio may not be amazing, probably sitting around 60%, but with a healthy reward to risk, I know that the law of probability will play out, and over the course of 100 or 500 trades, with a reward to risk of 2-to-1 and a 60% win ratio, then profit will yield. I think the most of my positions are placed on pound dollar, euro dollar, and euro yen.
Euro yen is often a pair that I generally have a decent performance with. Unfortunately at the moment, although we are trending on the daily and hourly time frame, both bullish, that would meet my direction criteria. But we are quite overbought at the moment, and we are at the highs. Obviously when buying in the market or when buying anything in real life, you want to buy when price is cheap, where there's a discount in place, and there's nothing for us to do at the moment. So we'll be looking for a nice pullback, maybe down to the UK pivot or down to S1, and then potentially take that next leg upwards. So guys, just wanted to offer a couple of tips Obviously within my role at Samuel Leach, I have the opportunity to coach and mentor our trading team, and so I get to see a lot of the similarities between the profitable and the people that aren't making too much from the markets. One is in relation to losses, in the sense that we all take them and they're very normal. I've taken one just yesterday, and I think that the measure of a good trade is the amount of regret that you'll take upon losing it. And so sometimes before committing to the position, just ask yourself a very simple question: how am I going to feel if I lose this trade? And often, if the answer is not very good because you could have done better with your analysis, then it's probably best to take a step back. Because what you'll realise over time is that good losses, they don't hurt. It's just the bad ones that do. My other key point that I like to explain to our live team is, in this game of uncertainty and opinion, the only thing that you have full control over is your entries. And with the viewpoint that we should control the controllables, I think that entries need to be near perfect, because once you commit to the position, it's very much down to the market whether it wants to accept your trade, and quite often excellent setups can go against you. That's why it's so important to be fully happy with your entry point, because remember, that's the only thing that's in your hands. And that, alongside having good reward to risk, is something that you should really focus on, and let the market accept it. And if it doesn't, so be it. But at least you know that you've done everything you could do to get into good positions.
So guys, thanks for watching. This video was brought to you by Active Trades. They've got their own intuitive platform called Active Trader, where you can trade highly competitive CFDs on global asset classes. Enjoy guys, make sure you thumbs up, comment and subscribe.